marketing the background.
Right. Right.
I think that's the city's challenge. Put aside all the regulatory issues, the company issues, the financial issues, and everything else, you get all those to get through. But at the end of the day, you go out there, you need to perfectly position yourself in that opportunity.
Mm-hmm.
That's the hardest challenge.
Yeah. Yeah, absolutely.
That's what I want to do about UX.
Cool. Sir?
Thank you, Joseph. Company's $8 and what it's been like 14 years in here, so it's real short term. And what we are looking for money for is to be able to hire veterans and pay them while they're on the job training. Because the way our structure is, once the person starts working with our company, it's all residual income and never quits, but it takes a while before that accumulates. So during the time period when you train a person and send them off to do some work, I want to be able to pay them as we go along. Once that happens, we only need a single fundraiser one time to start creating the money. Because once they are generating the income, this is a cash cow that will never quit. Well, it'll quit, but no, only not in your life. That's a possibility, but not tomorrow. So as long as the economy stays reasonably active, this is all B2B, small mom-and-pop businesses. This is not Walmart, this is not Target, this is all the little stores that are suffering because they can't afford to advertise. We'll take care of it so that they end up making more money with the existing clientele without having to work anymore.
Great.
I need funding for the veterans to go out there and do the work.
Awesome.
I'm Troy Owens. I am a solo traveler. We connect travelers around the world to a social network of travelers. So anyone traveling alone for business or backpacking, whatever, I connect them. Travelers, and we've already had a management fund, so we see around gaps. I've been in schools for the last 6 months and just building up users, and now we're going to build up the time.
Cool. Thanks. Sir?
I am Elias with rentals.com. We're an online marketplace for rentals. We like to be a residence, we're buying and selling rent stuff from each other companies. And we're also doing a crowdfunding thing with another platform that they don't have. Sorry? They're going at it. They're not that.
Because it's the marketing.
I'm sorry?
The issue is the marketing of the product.
Right.
And then, ma'am, you joined us a little later, but.
I'm from a company that does like online college gemstones and jewelry. So I did the e-commerce work for that. They would call me and I just came to check it out how it would work. So, yeah, because I did that business for already for 3 years growing, but I just want to expand it more, so we see the opportunity that
Great. Great. Well, good. Thank you all for coming. And this is Kinsey. Kinsey, you want to say hello quickly? And
You're going to learn a lot today directly from Josh, but I'll also be available after. If you guys have any additional questions, obviously there's a lot of people here.
Yeah.
A lot of times afterwards, lunch.
We're having some, I think, banh mi sandwiches that are going to be delivered around like 11:30 or so. The presentation probably will go to about 11:30, 11:45, depending on the number of questions from you guys. And then once that's done, we'll be able to go outside, have some lunch, mingle. More of the team will come in at that point as well. So, you know, if I'm not available because I'm talking to somebody else, Kinsey will be here. Also, Alan is another business development member that will come in a little bit later, so you guys can have all your additional kind of maybe more personal questions addressed at that time as well. Sounds like we have a pretty international crowd today, which is cool. So I thought I heard a few accents. We had one in the back. Was that? I was going to say it was either Australia. Is it Australia? Because I studied for 6 months out there in Sydney, and I recognize the accent. And then we had one over here, Russia. Okay. Were there any others? I thought there might have been another one. London. Okay. Cool. Canada. Very nice. Anyone else? Anyone else? So that's true. Friendly.
I've been here for a long time, I lost my name.
Exactly, but you're still friendly, so we. Well, good. I think we're going to get started in about 5-10 minutes or so. I liked that there were a couple people that went around and kind of spoke to really what they want to hear in the presentation today, and I'll try to cover all of that. I know that I can't see your name, but this gentleman over here was talking about what we can do to assist with kind of the raise and the onboarding, maybe that process. It sounded like that was kind of some stuff that you're interested in.
I'm okay with all four of those. I'm about personally.
Yeah.
I understand a little client issues because it's actually onboarding. To me, it's really, if you are an online company, you've got an online following of 100,000, 500,000, then your raise should be easier for you to reach out to that online following.
Yeah.
But if you're really a non-online following, business to business,
Yeah.
how do you get out?
Right. Well, it's great. And we're going to go into some case studies. And we have a perfect example. Probably our biggest raise on the platform right now is a B2B business that had zero community when they came to us. So we're going to go into a little bit of depth on how they were able to achieve their success and if some of those practices could apply to you as well. We're also going to cover kind of the 101 information about what's going on here, the compliance, the legal, financial, all of that stuff, so that everyone gets a really solid education. Did you have a hand, sir?
Yeah, one question. If I understand this correctly, how does the SEC look at the equity account? Because up until about a couple of years ago, you really couldn't do it with more than 25 people. And you can't present equity in anything that you want to raise money without having a registration.
Yeah.
So I understand from the lady in front that about a year and a half, some rules have changed and laws have changed.
Right.
And I feel stupid not to discover that because I've been.
You're not alone, by the way.
This information about 3 times. So.
Yeah, and we're going to go into all of that, exactly. Yeah, so there are new rules that came into effect in the Jobs Act. Yeah. Yeah, and we'll cover all of that. So I don't want to jump in. We are going to start a live stream at 10:30, which is basically what we're waiting for. But we'll get into all of that.
Can you talk a little bit about demographics or sector preferences or any type of investment preferences investors that are on?
Yeah, we'll touch on a little bit of that, but I don't know if I'll go into that much detail. Right now we have a community literally just under 100,000 people in our network that we market your raise to consistently from beginning to end. When we first started, we thought that it was going to be a younger millennial crowd of people that were going to be using our platform and investing in companies. Right now, though, and kind of early on, the demographic was definitely kind of a white, middle-aged American. That undoubtedly was kind of who our investors were. But as we've continued to grow and bring on new companies, more diverse companies, that community is becoming more diverse as well. And a lot of our investors are becoming now repeat investors, which is really exciting. So originally, maybe they came to us because they wanted to invest in Mike's company, but now they see your company and these other companies that they're interested in, and we constantly blast them with the other new companies that are launching, and they're checking those deals out to see if it would be of interest to them. So it's growing rapidly. It's becoming more diverse. The repeat investments are really kind of coming in as well. Yeah.
So, is the relationship between investor and one of us one-on-one, or is this sort of cool?
Well, it's all done through the platform. So all communication that goes on. They're buying a piece of your business through the platform. On their own, yeah. So they're not going to pick up the phone and call you and say, hey, I'm interested in your deal. Tell me a bit more about your company. All the information that they would need to make an informed decision is available to them. And if they have additional questions, then they can leave a comment on your page and say, hey, like I see that you valued your business at $15 million. How did you come to that? I couldn't get it in the information. And then you can choose to respond to that comment. And that's the only communication. There's no phone calls. All of those days are long gone where you're on the phone with somebody for an hour, hour and a half. You think it's a great call, and then, oh, the guy doesn't, or the woman doesn't invest, So those days are in, yeah. It's one-on-one, exactly.
Most people are already kind of understands, but one of the most important aspects of the spirit of the law, if we don't actually cover too much in this discussion, is that the idea is we're democratizing capital, access to investment opportunity and access to investors, right? So all of the information about your rates, once you build your campaign, and then as you continue talking about it, with the exception of specific cleared advertisements, the information should all be one place. So that's why an investor can't call you and say, hey, I saw this and I know you, can you tell me about the deal? You really shouldn't be discussing that with anybody who isn't in your innermost circle that's helping you decide your terms, for example. If you've got advisors, people in that you rely on, or even your spouse or family members, you're getting advice as you're building your raise, that's okay. But when you can't solicit investments by calling people, this is specifically designed so that nobody gets a leg up. It's about total democracy for everyone. So if somebody clicks on your ad on Facebook and they live 1,000 miles away and have no connection to you whatsoever, they shouldn't be at any disadvantage for understanding what you're doing. That's why the comment sections, they're really important because all of the questions from investors are going to be asked in this public comment section at the bottom of your page, and all of your answers go there too. One thing that I think is always really interesting is sometimes I get calls from when issuers, CEOs first launch their company, they start getting really stressed out because they get hard questions in their public comment section, and sometimes they want to delete the question, or this person is criticizing me, and people can be pretty harsh on the internet, And my advice is always make sure you address it in a friendly, open, and complete way. Every single person, even the person who's insulting you at the bottom of your page, can be a potential investor, and the only way that's going to happen is if you address them, answer their questions, and then everybody else is going to see how you handle that too. And we had one issuer who actually, however he did this, he saw the name of the potential investor, we didn't know, Googled this person, found out that this person's father was some sort of influencer in finance, pulled a quote from the man's father, and then sent it back to him as part of his response. And was like, to quote the great so-and-so, who he wasn't 100% sure was the guy's father, but it turned out he was right. So then the guy replied, and he was so honored, and suddenly they're best friends, so it turns this really negative interaction into something super positive, and that's something you want everybody to see, because for the one person that's asking that question, there might be a lot of people who are thinking it, but aren't going to bother to put it into words. So now if they're reading further and their exact question that's kind of a negative gets addressed by you, gets completely turned around, which of course you can do, so it's all in writing, you have time to think out your response. That can be a major way to connect and engage, and it gives people the second layer of understanding who you are and what your team is, which is a big reason that people choose to invest. So I think that just keep in mind that this is not going to be like a traditional, like Josh is saying, calling people, having a one-on-one interaction. You want to think about every interaction you have on this as being with everybody and treat it that way. Sorry, I didn't even cut it.
No, that was good. That was good. Just out of curiosity, how many of you guys have done a crowdfunding campaign before, whether it be Kickstarter or Indiegogo or anything like that? 1, 2, 3, 4, 5, 6. Okay, so maybe about half or so. That's good, and I think it's nice to see that. I think we've seen that companies that have come from that background are more familiar with maybe how this works as opposed to those that have not. We've had plenty of success stories where this is their first time crowdfunding, but there are some similarities between that and also some key differences. So I'll try to kind of mention those to you. And one that Kinsey really just touched on is, you can't do any of this marketing work or pre-solicitation before the raise begins. Whereas on Kickstarter, 30 days before your campaign goes live, you can start talking about like, we're going to go live and start accepting donations in 30 days, sign up to become part of our newsletter, and we'll give you more information when we're live. There's some different strategies you can explore, and we'll kind of talk a little bit about that when we get to that section of the presentation. It is now, according to my watch, 10:30. Ryan, how are we doing? Are we? Okay, awesome. So we are going to be live streaming this event, hence the microphone and the funky wires. If you want to say, if you want to go, whatever you prefer. Yeah, we'll bring you in later. Yeah, so good. So awesome. Just to introduce myself to the online community, my name is Josh Amster, Director of Business Development here at StartEngine. This presentation, as I mentioned to you guys before, it's a very educational one that's going to cover basically everything you need to know about the crowdfunding rules, StartEngine, and we're going to go into some deep kind of case studies on some of our more successful raises that we've experienced thus far. I do like questions. I really want this to you to get a ton out of this presentation. Really, the only thing that I ask is that questions be held to the end of each slide. And once we kind of get to the end of each slide, I'll kind of turn it over to you all to see if there are any questions. But let me kind of get through the slide and kind of give you everything that you may need to know. And if there's things that you need further clarification on, please do bring them up. I really do love answering those questions and getting those addressed. So as you probably know, StartEngine, we are an equity crowdfunding platform, and it is our mission to help entrepreneurs achieve their dreams. That's why we are here. We are a team right now of 13 people, and we have several interns as well. And our entire mission and kind of goal and why we show up to work is to help you guys raise the capital that you need to then, advance your businesses wherever it may be. And so what we try to do is simplify the capital raising process, which can be very difficult, but we have, try to simplify our onboarding, the investment process, the entire thing to really make it simple that you can essentially do this on your own. And you don't need really kind of all of our expertise and help. We're not there yet, but that's where we're trying to go. And so that's, a little bit about StartEngine and who we are. So, I pulled this today. These are our 3 most popular raises at the moment. And they kind of give you an idea. They're totally a bunch of different companies. There's a social network. There is a device that makes any bicycle electric. And then there's a B2B solar business. As you can see, the B2B solar business has raised over $4.5 million thus far, and they're continually raising. So we'll go into that solar company a little bit more and kind of explain to you, how they got to that number. But as you can see, just a diverse, set of companies. Yeah, go ahead. This by sizes of the raise, dollars that have been invested to date. And these are the live companies at the moment. These are some of the most recently launched companies. So, across the board, some that literally launched yesterday. And, what's really exciting about launches is in July, and you guys can actually, those that are in attendance can kind of peek over to the wall, we launched 15 companies in the month of July. And that for StartEngine was a record for us, and we're really excited about that, and we want to stay on this path month to month. We have a goal to try and launch 15 new companies every single month and then grow that from there. But we are launching tons of companies every month. As I said, a very diverse group of companies. And so, as you can see, there are new companies that are going up there every single day. So some of the momentum that we have seen. So as I mentioned to you before, we're right near 100,000 total users. We have 98,000 to be more exact. And traditionally what we've seen through our raises is that our community will make up about 30% of the investors that end up in your offering. So if you have 100 investors that ultimately get you to your total sum, traditionally 30 of those people are going to come from our existing community already. So that's a really kind of exciting thing for you, the entrepreneur. Yes, one day we would love it that when you come on StartEngine, we account for 100% of your investors. That's the dream and that's the goal and that's where we want to go. not there yet, but we are steadily increasing that percentage quarter to quarter. So we're really excited about that, and we're seeing a lot of those repeat investors as well, as I mentioned to you. Our average investment is $1,500 right now. So you know, if you're looking to raise $1 million, then it kind of comes down to a number game based on what the average is. And so you kind of run through those scenarios in your head. As a general rule of thumb, though, whatever you set the minimum investment amount to be, the average or your average will be 3 to 4 times whatever that minimum is. That's basically what our statistics are showing. So if you set a $500 minimum investment amount, you can expect a $1,500 to $2,000 average investment. So total raises, since StartEngine's inception, which was in June of 2015, we have raised over $36 million for companies. Our large OPO average raise is $4.75 million, and our small OPO average raise is $389,000. Now you may be wondering what's an OPO. It's basically our term for an equity crowdfunding campaign. We call it an online public offering. It's a kind of a term that we coined, and so we use that terminology when talking about the regulations. Because the common, regulation CF, regulation A+, D, 506C, there's all these different crazy things, and it can get very confusing. So we like to try and keep it simple. There's a small OPO, a large OPO, and then a select OPO. The momentum, as I mentioned, in July alone, we launched 15 companies, and we had our repeat investors grow by 15% during that time as well. So a lot of people are paying attention to our emails, looking at these companies, visiting the platform, looking at the deals, and making their own decisions on whether or not they want to invest. Are there any questions on any of this information? Yeah. So users are a number of people that have created an account on StartEngine. So there's 98,000 of those people that are on our email list that we distribute information to on a weekly basis. The number of investors as compared to that is right around $25,000. 25,000 investors. So if you want to break it up that way. So there are 25,000 investors, 98,000 users. That could be a nice kind of way to segment the list. It's a good question. The question is how many investors on average go into a deal? And it really varies depending on the sizes of the raise. So, with the average investment being $1,500, depending on how much you end up raising, that will determine those number of investors, right? So if it's $1 million raise and the average is $1,500, it's going to be a little bit less than 1,000 investors. But if it's just because it so varies, I mean, to give you a kind of a scope of the size of our raises, our smallest, raise to date that's closed was around $30,000, and our biggest was $17 million. So it's just it's a huge scope of companies that we're working with. Yeah.
Of course, you have a goal to raise, for example, $1 million. Mm-hmm. And you instead, you only raise $800,000. Will once you get reach your goal, funds go back to the investors?
Yeah, it's a good question, and I'll address that now. So basically, and the question was, if I want to raise $1 million, but I've only raised $800,000, what does that mean? Am I not allowed to take that $800,000 home, or what's the situation? And so it's a great question, and this is a major difference between StartEngine and equity crowdfunding versus the traditional rewards crowdfunding space. In the rewards space, what you do is you set one goal, and if you hit that goal, then you can take the money home at the end of the race. On StartEngine, what you do is you set a minimum target and a maximum target. So let's say your minimum is $10,000 and your maximum is $100,000. Once you break $10,000, you have decisions, or you have choices. You can either begin to close on the money as you continue to raise in what's called a rolling close, or you could say, I'm going to wait until the very end of my raise to see where I end up and then make a decision on whether or not I want to close on the money. So if you end up only raising $10,000, but you really said I wasn't going to walk away unless I got 50, then you can cancel the offering, return all the investments to the investors, and be on your way, and it's like nothing happens. But if you raise the 50 and you say, yeah, I want to take that money home, you can take that money home because you've surpassed that minimum target amount. And then once you surpass it, you can close on capital as many times as you want as you continue to go.
So they have the power, you actually close on it.
Mm-hmm. Yeah. And you can close on it during the raise as well, which is a huge competitive advantage for StartEngine. I don't believe that any other platform out there right now has rolling closes. So, what that means is you don't really need to launch your campaign with a big marketing budget up front. You don't have to set it with any marketing budget up front at all. If your existing community plus StartEngine's existing community can get you to that maximum target, then you can start to use some of that money to go towards marketing. Are we having issues?
Yes, you're very loud, you're well spoken.
Oh.
Can you pull
I like to project. I guess that's, pull it out.
You can put it right, just right on the logo.
Okay.
Just pinch it right on. Yeah.
Great. All right. That'd be a little softer. Yeah, go ahead.
Assuming that you guys are not what portion of it is your portion?
I'll get to that. We're going to cover our fees and everything. So the law states that you can raise up to 1.07 million for a small OPO every 12 months in a 12-month period, or the large is you can raise up to $50 million in a 12-month period. I have a whole slide devoted to that as well, but you essentially could have the campaign up there for 12 months if you wanted to, but the average company is setting it to be between 60 to 90 days as the duration of their campaign. Any other questions on this information? Because I'll cover a bunch of that other stuff shortly. So again, OPOs, this is what we coined an online public offering, commonly known as equity crowdfunding, and I'll kind of get into the information about that. A brief history of how we got here. So in April of 2012, the Jobs Act was signed into effect. And basically, it was going to change the way that private businesses were able to raise capital. Now, for the first time, the general public could invest in private companies. It was no longer limited to just the wealthy and accredited investors, which it was in the past. Now, anybody over the age of 18 could invest in a private company and get a piece of your business. On top of that, general solicitation was permitted. So you could solicit investors online. You can solicit investors kind of, in any medium, whereas before that was not allowed and banned. So those were the two major differences that this Jobs Act brought into effect. So StartEngine, we should kind of add another little line here. We launched our crowdfunding business in June of 2015, which is when the first piece of legislation that allowed for the public to invest in private companies came into effect, and that was the large OPO. Our first company that we launched was Elio Motors, and what it did is, to date, it's one of the most successful large OPO raises in the space. They raised nearly $17 million from 6,300 investors, and it put us in a leadership position in this industry right off the bat. So, people started to know about StartEngine, who we were. Elio to date is a very recognizable raise. And is almost kind of the poster child for equity crowdfunding, or as we call online public offerings. In May of 2016, the second piece of legislation that allowed the public to invest came into effect, and that's what we call a small OPO, or what's commonly known as Title III in regulation crowdfunding. And it allows companies to raise up to now $1.07 million, and I'll go into more information about that. And then in March of 2017, we really saw tremendous momentum. We helped 4 different companies raise over $1 million in 4 straight months. The momentum has continued to keep rolling. Several more $1 million raises, 15 launches in July, and really exciting stuff going on. Any questions on this? So this is kind of the overview of the different type of OPOs that StartEngine offers on our platform. And I'll send you guys this slide or a presentation when we're done, so don't feel like if you don't get a good photo, I'll send all this stuff over to you, so don't worry about that. But the first one that I'm going to start with is the small OPO. And this is by far and away the most common legislation that entrepreneurs take advantage of on StartEngine. It allows a private business to raise up to $1.07 million every 12 months. And these raises, as I've mentioned, are open to the general public. So not only accredited investors, but also non-accredited investors can invest in these private companies. The beautiful thing about it is that there is no SEC qualification needed. So all kind of the red tape that you'll experience with some of these other rules, that doesn't exist here. So the barriers to entry are very low, and it's very easy to get started. What you need to do in order to get started is complete what's called a Form C document. And this is the document that gets filed with the SEC. Included in this Form C are some basic legal disclosures on your business, some risks, the terms, a description of the business. And on top of that, your past 2 years of financials will be included. And depending on what your maximum raise is for this offering will determine whether you need an independent CPA to review your financials, or if you, the principal of the business, can self-verify those financials. And that threshold is $107,000. So anything that's $107,000 or less, only the principal of the business needs to verify the financials. Anything over $107,000, then you will need an independent CPA to review your past 2 fiscal years. It's not an audit, but it is a review. It's a step down from an audit. However, if this is your second time raising under these rules, then you will need to supply an audit of the past 2 fiscal years. So that is kind of the main differentiator there. Like I mentioned, you can't solicit investors until the raise is live. So you can't talk about this offering until your campaign is live on the platform and accepting investments. So, in the months leading up or weeks leading up to the offering, you can't, email your community saying, all right, guys, we're going to be accepting investors in 2 weeks. Get excited. We'll announce all that stuff when it's here. That's not allowed under that rule. The SEC considers that conditioning the market, and it is not permitted. Lastly, is the shares are freely tradable after 1 year. So if people invest in your company, today, 1 year from today, they could actually trade those shares if they wanted liquidity. And StartEngine pretty soon is going to be launching our own secondary trading platform called CrowdTrade, where the public can actually freely trade their securities. So we're really excited about that. It offers some nice liquidity opportunities for your investors, and a nice exit if they so choose. Are there any questions about the small OPO rule? I imagine there are probably some. Yeah.
Sir, you must work with a CPA if your gross income for last year or so.
No. So the question was about the financials and when you need a CPA review. And basically, like I mentioned to you, you said a minimum target and a maximum target for your raise. If your maximum target is above $107,000, if it's below, let's say it's $100,000, then only you need to verify the financials. You don't need the CPA. Anything over $107,000, then you'll need an independent CPA to actually conduct a financial review on the past 2 fiscal years. Does that make sense, everybody? Okay.
So the maximum is over.
Correct. If the maximum, exactly.
That's $107,000 that you're trying to raise.
Correct, as your maximum goal. So you'll state that when you file this document. Yeah.
That's the amount.
The maximum amount that you're looking for. Correct. But what a lot of companies on our platform are doing is even if they want $1 million, they're starting with a $107,000 maximum goal to begin with. Because what it does is it limits the upfront costs, and you can get launched much quicker because you don't need the CPA to do that review. And then once they are approaching that $107,000 number or even exceeding it, then they're closing on some of the money that they've gotten, hiring the CPA, getting the review done, and then once the review is done, they're posting that to their offering and simultaneously increasing their maximum to $1.07 million. So you can do this all in the same raise. So if you want to save on the upfront cost and say, I'm only going to get that review done when it's necessary to do it, then you can take that approach. And a lot of companies are beginning to take that approach. 2 stage, but 1 raise. Yeah.
Okay, so just to make sure I'm totally understanding this, then does that affect when you're able to close or how often you're able to close?
Well, no, because that's the maximum. So you'll have a minimum too. So traditionally our minimums are like $10,000. It's the amount to break escrow. And once you break 10K, then you can start closing as many times as you want, or not close at all until you decide where you end up. Any other questions on the small OPO? Okay. Yeah.
Crowdfunding, share exchanges,
There probably are a few. I've seen some news recently, but they're traditionally more only for accredited investors. That accredited investors can trade their shares amongst other accredited investors. Our platform will be for everybody. So not only the accredited investors, but also the general public, the non-accrediteds that are now allowed to invest in private companies. They can also take advantage of this as well. So moving on to the large OPO, this is the rule that Elio Motors use, also that Rayton Solar Company that raised about $4.5 million thus far are taking advantage of. This rule allows a company to raise up to $50 million in a 12-month period from the general public. Now, under this rule, the big difference here is that you need to be qualified by the SEC in order to sell securities. And that can be a pretty extensive process. So what it basically means is you must file what's called a Form 1A with the SEC, and it's a much more extensive legal document than compared to Form C. And on top of it, you need to provide a 2-year independent CPA audit. So no reviews, no self-verified financials. It's an actual financial audit of the past 2 fiscal years. And once that's complete, then you'll file it with the SEC. And once it's filed, then the SEC needs to review it and then ultimately qualify it. And that process of getting qualified by the SEC can take 4 months. So it's not a short process, and it's also costly. To get these 2 things done by a security attorney and a CPA, you're looking probably around $75,000 or so to get that work done. So it's probably not for every early stage business, but what we're seeing is a lot of our companies that are coming to us, you know, let's say they want to raise $5 million. Well, what they're really doing is they're going to start with a small, raise the full 1.07 million. In that process, close on some of the capital, engage a security attorney and a independent CPA to get these 2 disclosures done, and then file with the SEC either during the raise or immediately after, and now then moving into a large OPO after that. So it kind of the transition goes from small to large OPO. That really seems to make a lot of sense for businesses. Now there are some companies that, you know, are more mature, they have more cash flow and they can afford this and they're going to go straight into large OPO. That's fine, but there aren't as many as those as there are kind of that are going into the small OPO rule. Another difference here between the large and the small is that in the large, you can solicit investors before your offering goes live. And basically, this is called a testing the waters period. So, you know, initially, we thought this is a tremendous thing for companies because they could see if there's interest in their company from the general public. Say, hey, I'm StartEngine and I'm an equity crowdfunding platform. I'm considering raising capital. Would you be interested in investing? If so, you can, you know, reserve shares in my business. It's a non-binding indication of interest is what people are pledging. And so these companies would test the waters and they'd raise $20 million in reservations and people started freaking out like, oh my gosh, like this is incredible. However, then when you went live, that conversion rate between what was reserved and what was actually then invested was very low. And so these entrepreneurs that thought they could raise $20 million, in fact, were raising maybe $1 million or $2 million. And it was, you know, it wasn't really a good barometer for what was to come. So we've kind of, the companies have really shied away from doing the testing the waters now and just kind of going all out with their marketing at the very beginning when the offering's live, but it is available if you want to do it. And lastly, these shares are freely tradable immediately after the raise closes. There's no year restriction on the transfer or sale of those securities. Any questions about the large OPO? Yeah.
Why are the fees so high, $75,000?
Yeah, so it's a pretty extensive legal document, the Form 1A. It's basically like it's a step down from an S1, which is what you actually complete when you're going to an IPO. So you're going to definitely need a security attorney, and they're charging normally between $40,000 to $55,000 in a flat fee to get that done. And then the audit, depending on the financial history of the business, can be anywhere between $5,000 to maybe $25,000 to do that as well. Yeah.
What about the general fee would be for if you want to raise it above in the small OPO for $107,000? If you want to hire a CPA, what would be the general?
Well, if you want to, you're saying if you want to go above? Yeah, I actually have a slide coming up on the fees and all of that. So we'll get to that soon. Any other questions on the large? So the last one is the select OPO. This is a Regulation D 506C raise. It's not that common on our platform. In fact, we don't even offer these individually. We only offer these in conjunction with either a small or a large OPO. And basically the example I like to give is for a company called Gulfport, which I'll get into more detail in a minute. But what they did is they set out to raise 1.07 million through the small OPO. They oversubscribed their raise and ended up with $1.4 million committed to them. So of that oversubscription, there were several investments from accredited investors. And these select OPOs are only available to accredited investors. And so what they did is that was dead money anyways. So they opened up a select OPO immediately after their small OPO and converted those accredited oversubscribed investors into their select OPO. On top of that, they also raised an additional $400,000. So in total, they raised $1.6 million through a small and select OPO. So that's another strategic move that a company can do. Let's say if you want to raise $2 million, but it doesn't make sense to go into a large OPO, you could start with a small, oversubscribe that, and then move into a select immediately after your raise to go above the $1.07 million that the small limits you to. Yeah?
So there's no SEC
No, there's not. Basically, what you can do for this is use all the same information that you use for your small. And so, like for Gulfport, which is that company, they opened up their select maybe like a few days after their small closed because they just used kind of the same information, changed a few terms, but that was basically it.
What's your breakdown of sellers between accredited and
Non-accredited, the question was about the breakdown between accredited versus non-accredited investors in our community. It's basically what you see with the public. 95% of our investors are non-accredited, 5% of them are accredited. Any questions on any of these? So now I'm going to go into some more details about some of the companies that have used these rules effectively. So we'll kind of go into some details on that. The first one I'm going to talk about is Saunders Electric Car. And you'll notice down here that we label them as a full service company. We're going to get into the service options that we provide here at StartEngine, but basically there's two routes. There's a full service route and a self-service route. The full service route is you'll be kind of getting that constant attention, care. On top of that, you'll get access to either myself, Kinsey, or Alan, who you guys will meet in a little bit. And Saunders was a company that I worked on with the Saunders team. And basically, he came to us with a dream to build the most attractive, affordable electric car ever. And his dream was to, allow these cars to be sold at a base price of $10,000, which if you know about electric cars, that's a crazy, crazy idea. There's really nothing even close to that in the market. And he had a track record. He had done this for electric bicycles. He had run probably one of the most successful Indiegogo campaigns that raised, I think, around $10 or $11 million. And he built an electric bicycle for $500 and delivered those bicycles to all of his initial backers and supporters. So he had a track record of doing this. And he said, you know what? I want to build the most attractive, affordable car, and I want to do it through equity crowdfunding. Instead of people backing me and getting my product, I want them to actually, become investors and potentially share in some of the upsides that can come with, building a successful business. So he incorporated his company and what was it? It was August of 2016. He launched his offering on StartEngine in October of 2016, and he closed his round on December 31st of 2016. He raised the full amount of $1.07 million. His terms, which by the way, the terms, you guys will set those terms yourselves. You're in complete control of all of those. He set a pre-money valuation of $33 million for what was just an idea at that time. Kind of crazy to wrap your head around for all those people that are in this room and are toying with valuations of what your company can be worth. He believed that because of the industry that he was in, the track record that he had, his company should be valued at $33 million, and the public responded to that. They fully subscribed his raise and even oversubscribed his raise. He had a minimum investment of $120, and as I mentioned, he ran a 75-day campaign and raised from 1,600 investors. So, really, really great success story. As I mentioned to you, I was the one that was working with Storm Saunders, the CEO of the company, on a daily basis, caring for his needs, servicing him, brainstorming ideas, connecting him with vendors, whatever he needed. We were there to kind of hold his hand and walk him through the entire process. Are there any questions about this offering? Yeah. How much he spent in marketing? It was interesting. He didn't spend too much. He ran, I think, about $5,000 worth of paid ads on Facebook, which had a great conversion rate for him, right around $100,000 that came from that $5,000 paid ad campaign. And then everything else he just basically did through his existing communities, but for the bike company. So this is now for the car company, which is a different, same under Saunders umbrella, but different business. But he marketed to those bike people. On top of that, he ran a contest called a Gleam contest to gain new emails, new followers, etc. And that's kind of one of the unique marketing strategies that we encourage companies to do before their raise, and I'll go into that. But he did not spend very much on marketing at all during the raise. Yeah. We connected him with the Facebook company, and then we managed the relationship between the Facebook company and him. So we don't actually we can't physically do the advertisements on Facebook. We're not permitted to under the rules, but we managed the relationship and we connected him with the vendor that he ended up working with. Yeah, that was the deal that he got through that vendor, yeah.
Can you explain that? You connected him with Facebook advertising people?
A Facebook marketing agency. Yeah, exactly. That's like what they specialize in. Yeah, absolutely. We have tons of resources and vendors that we connect you to, whether it's marketing agencies, security attorneys, CPAs, whoever you need that can help you with this offering. We've built plenty of relationships with those people. So the second company is Golfboard. This is another full service company that I worked with directly. And as I mentioned to you, what they did is they went from a small OPO to a select OPO. And a golf board, basically, they're reinventing the way that you get around a golf course. Instead of getting in a golf cart, you're actually getting on one of these boards and you're kind of surfing the earth, which is their slogan. They actually brought them to our office and we had an event with them after their race was done on the back patio over here, and they're really, really fun to ride around on. And they're trying to bring, a new movement and age into golf, a younger generation of people, and you can get, play around in golf in about 2.5 hours instead of a 4.5 or 5 hour ordeal, which is what it typically will take. So as I mentioned to you, they raised the full $1 million amount. They oversubscribed that raise, and then they opened up that select OPO for only accredited investors immediately after their raise, moving the oversubscribed people from this first raise into that select raise, and then also adding in additional people into that select raise as well. And in total, they raised $1.6 million from both the small and the select OPO. They set a pre-money valuation of $8 million. They had a $125 minimum investment, and they ran a 60-day campaign. Yeah. Yeah. Yes. So as you know, there's a maximum at 1.07 million with what you can raise under the small OPO. In their offering, they raise more than that. They raise $1.4 million in total, but they can only close on 1.07 million. So they had this oversubscription amount of around $300,000 or $400,000 or so. In that amount, there were a lot of people that were accredited investors. So we went to them and said, hey, why don't you guys open up a select OPO and try to move those oversubscribed accredited investors into that select OPO, because it's dead money either way. Anyways, you either have to give it back, or they don't want to move into select, and it's no difference. But for those that do want to move over, then you can get that, additional capital. So that's what they did. They opened up the select, they moved those oversubscribed accredited people into that offering, and they also marketed their offering as well to bring in more accredited investors, and that's how they got to the 1.6 million in total.
Timeline, small, same timeline?
One after the other, immediately after. Exactly. Small first, oversubscribed it, immediately opened up a select. Yeah. Yeah.
So Golf Board made the investment vehicle.
They said
created
yeah,
the investment vehicle.
Correct.
For these people to invest in their company.
They created the terms for the offering. So they set their own valuation, they set the share price, the type of security they wanted to offer. All of that is the decision of the company themselves. What StartEngine allows for is we're the platform where the investment process takes place.
And you're around because there's a lot of people that are not accredited investors, and this is allowing them to invest in IPOs or OPOs before the company maybe even goes
Correct.
public.
Yeah, for the small OPO rule, you need to launch your offering on a platform that is registered with FINRA, which is the governing body. And so if you're not a FINRA regulated platform, you cannot conduct small OPO raises. So if you want to do a small OPO, you just want to do by yourself, you're not allowed to do that. You have to go to a platform like StartEngine to conduct your raise. The last company I'm going to talk about is MagnaBid. And MagnaBid is a self-service company. So they decided not to go the full service route, but decided to do this on their own. And what they are is they are a platform that changes the way that patients match with doctors. Their approach was that they came to a StartEngine workshop just like yourself. They learned, and they then used our tools that we've created to build their offering on their own. We have free webinars on a weekly basis for you guys to attend. We've built guides. We have a general support line that you guys can communicate with, and all this is for free. So they said, you know what, I'm going to go that route and see what I can do. They initially set a maximum goal of $107,000 to avoid the upfront cost of the CPA. They have now oversubscribed that $107,000, and so they're in the process of getting the financial review done. And once that's done, they're going to post that review and then increase their maximum to whatever it is that they end up raising that to. It can be as much as 1.07 million. So I think this is a great, story that you don't have to go the full service route. 7,000. Yeah. Did I just say million? Sorry, 1,000. That would be good, 107 million. But it's proof that you can do this on your own as well. So if you don't have the means to engage the full service package right now, it doesn't mean you can't be successful. You can, and MagnaBid and several others on our platform are proof of that.
Question on that.
Yeah.
When you get to that point where you want to change the maximum, is that considered a new campaign, or is that just really modifying the existing campaign?
It's modifying the existing campaign. The question was, if you get to that 107,000, you want to change to as much as $1 million, is that a new campaign, or is that the self-existing campaign? And it's the same campaign. You are just filing an amendment to change some of the terms. So it's all one raise.
Excuse me, the people that invest in these companies, what do they get? Like, is it different? Yeah, I'm sure it's different with everything.
Yeah,
but
it's different with every company. So these guys, I'm pretty sure they offered equity in the business. I know Golf Board and Saunders both offered equity as well. But you can do a convertible note, you can do a debt offering, you can do a revenue share. You have the freedom to choose the type of instrument that you want to sell to the public. So now I'm going to go into some of the advantages and possible disadvantages of why you would do this. I'll start with the disadvantages. So first and foremost is your financials will be public information. For some entrepreneurs, that's a deal killer right there. I've been on the phone with several people or in meetings where I say, you know what, your past 2 fiscal years are going to be public knowledge. And they're like, I'm not comfortable with that. And I said, well, there's really no getting around that. That's kind of what the rule states, and you have to oblige if you want to do this. So your financials do become public information, and it's the past 2 fiscal years. Now it's just top line financials. So, revenues, accounts receivable, debt, short-term, long-term. It's those top line numbers which are public. And it's not the nitty-gritty details of where you're spending every dollar, but that is public. It's filed with the SEC, and it will be for anybody to see. Number 2 is that these successful raises, they take focus, strategy, and energy and time. This isn't a thing right now where you can just come to StartEngine, drop off your company, and show up 3 months later and say, all right, so how did we do? It really is a team effort, and it takes the focus and energy. It's not going to take over your lives where you can't run your businesses by any means, but the campaigns that have been the most successful, there has been a focus, there's been a focus from the top, realizing the importance of raising capital and what that can do for the business. So we're here to support you guys and help you, but it can't just be a one-sided support team. There needs to be teamwork, camaraderie, all of that to be very successful in these raises. Lastly is, after your raise is done, you do have reporting obligations to the SEC and to your investors. So if you do a small OPO, you have to report on your financials and any pertinent updates on the business once per year. If you do a large OPO, you have to do it twice per year. And that is your only obligation to the SEC and to the investors. You can communicate with the investors as much as you want, and we've seen that companies will do this because they act as brand ambassadors in their own little mini marketing department if you want them to. But if you just say, you know what, I don't want to deal with any of these people, I want to just focus on my business, then that's fine. You can do that, but you do have to make that report once per year or twice per year for the large OPO rule. Some of the advantages. So probably the biggest one, as I've mentioned to you before, is you set your own terms. You'll determine the instrument that you want to use. You'll determine the valuation, the share price. All of those decisions are in your hands, which is really, really awesome for the entrepreneur, because when you go to raise capital traditionally, it's the people with the money that set the terms on you. And they take power, they take board seats, they take preferred shares, which are above you. They're in it to make money themselves. And it typically doesn't have your best interest in mind. In fact, there's tons and tons of examples of a VC coming in, investing in your company, and they don't like the way that you're running your business. Well, see you later, you're out, and this is now my company. So you have to be very careful with that. But in this space, that doesn't happen because you go to the public with what you're comfortable with. So that's a beautiful thing for all of you in here. Number 2, as I mentioned, the brand ambassadors. So the people that invest in your company will in turn become your brand ambassadors. They'll tell their friends, their families, their communities about this cool company. Hey, I just invested in StartEngine. Have you seen what these guys are doing? It's awesome, and you should check them out. They do act as their mini marketing department if you engage them to do so. If you decide, I don't want to engage these people, I don't want that, that's fine, but this can be a tool for you to use if you take advantage of it. Number 3 is these types of raises can accomplish many different things at the same time. Not only do you raise capital, but you're also forced to market this raise. So your marketing and your brand equity in the business is going to increase as well. And then lastly, if there is a way for you to increase sales during this raise by offering perks of some sort, we highly encourage that as well. So it really is a multifaceted raise that you can accomplish a lot of different things at one time. And then lastly, as I kind of talked about before, is you can really raise capital consistently. The rules allow you to raise every 12 months. You can keep coming back every 12 months, or you can keep jumping back from rule to rule. I'll go small OPO to large OPO, or small OPO to select OPO, and then I'll go back to a small OPO after a year and do the same process and just keep raising capital from the public on your own terms, nonstop if you really wanted to. Any questions about any of this stuff? Yes?
I think I have a question. What we said timeline, 90 days to raise, for example, and at the end of the 90 days, you have to raise it. Can you start your timeline over again?
So you can raise $1.07 million in a 12-month period. So if your first raise raises $500,000, you can then launch another raise right afterwards for an additional $500,000. Now, keep in mind, for the second raise, you have to produce an audit on your financials, and the reviews aren't sufficient. So that's kind of the thing to really keep in mind. But yes, you can raise up to 1.07 in a 12-month period. So cost. I know there were some questions about cost that people had, and this is the slide for that. So for the small OPO, I like to break it down into kind of upfront, back end, and then optionals. So upfront cost, if your maximum is $107,000 to start, the upfront cost can be zero. You don't have to spend anything upfront to get everything done. MagnaBid is a perfect example. We've had several companies that have launched with $0 paid upfront. If you have a maximum goal of $107,000 up to $1.07 million, then you are going to incur some upfront costs. Number one is you're going to have an independent CPA review your financials. That can cost anywhere between probably $2,000 to $5,000, depending on the financial history of the business. And then on top of that is we do require an attorney of record, and you're probably going to want to have an attorney that's going to help you construct all the information for this. They're charging anywhere between $2,500 to $5,000 for their services. So those would be your upfront costs when it comes to that threshold. I'm going to jump quickly down to the bottom, and this is regarding that full service package that I kind of have been mentioning a little bit. Our full service fee is a $4,000 upfront cost. So that would also be added up in here if you decide to go with that package. What it includes is, first and foremost, we will build your campaign page for you. So when you come onto the page and you view your company, the first thing that you see is that landing page with the visuals and the story and all of that stuff. We will actually build that page for you guys. You'll provide assets to us, and you'll provide kind of your key messages and storylines as to why you did this, and we'll interview you for that. So we're going to actually take all that information and then build a page. But you obviously will have final say. So if you want to tweak some things, you're more than welcome to tweak it to your liking. That's the first part of the package. The second part is you'll get access to one of our business development directors. And what we're going to do, like I mentioned, is going to be able to service you throughout the campaign, be your expert when it comes to brainstorming, marketing advice, strategy, service any needs that you have. So if there's an issue that you need to get taken care of right away, just call us. We'll get it handled right away. We're going to hold your hand from the start of the campaign until the very end of the campaign when everything is closed and dispersed. You'll also get access to our build workshops when you're onboarding your campaign. So we only run these for our full service companies, but we bring in security attorneys, we bring in CPAs, and our content team is here as well. And it's basically a day that we just onboard your offering. We provide you the experts at no extra cost for you, that you can ask them questions, they can help you complete things, and it's been a very valuable tool for a lot of the full service companies. And then lastly is we'll streamline the onboarding process. So when you submit for due diligence at the very end, we'll bump you to the front of the line, as our queue for due diligence is pretty extensive. We'll review you guys first and provide comments and all of that. So that's what that full service package includes. The StartEngine fees. So our general fee is 6% of what is raised and what is closed on. So if you raise $1 million, we will end up taking $60,000 as our fee. What this does is it also includes all of the escrow fees that are involved in the offering as well. So you don't have to worry about any per investor escrow fees. That's all lumped into our percentage. Then you have the decision on, first off, if you want to accept international investors. Just to be clear, we unfortunately don't accept Canadian investors. Canada has put in rules that they don't allow them to invest in these offerings. So no Canadian investors are permitted, but anywhere else in the world, you can accept international investors. If you do, we take 8% on those international investments, and the reason for the increase are the escrow fees are more expensive for the international investors. Lastly, and very exciting, is we just implemented credit cards. I believe we're one of the first, if not the first, platform to allow credit cards as a payment option. If you decide to accept credit cards, there is an additional 4% that will be charged for those credit cards investments. So if you are, so if it's a domestic investment and they do credit card, it's a 10% fee on the credit cards. We actually don't make any money on this. It goes to that credit card vendor that we're working with, so they get those 4% and we take our 6%. I anticipate that that cost is going to come down as this becomes more ubiquitous. But right now, it's been really challenging to find a credit card vendor to work with us to accept a security as a via credit card payment. But we found that person. We're live with credit cards right now. We're really excited about it. And we've seen that it seems to be the most favorable way that people like to invest. So makes sense. Yeah. 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 But it is permitted. No, it has. There's just been no credit card vendors or merchants that have wanted to allow for that. Yeah. Correct. Yeah.
With the $14,000 fees for financial, is that a referral from StartEngine to a vendor that helps actually put the terms together? Or
Correct.
Okay.
Yeah, so we can't set your terms for you.
Right.
We can share with you what all the others have done. We have a spreadsheet that shares what every single company has done, their evaluations, what type of business they are, where they are in the revenues. We have that available to our companies when we're working with them, so they can help. But you make that decision, or you would work with your attorney to make that decision.
So if we had in-house legal and had our terms already set, we would not be required for that cost, or is there another cost where you would have to review these terms?
No, if you have your own attorney, then that's great. You can work with that. Now, I don't know if they're a security attorney or not. You're probably going to want someone that is familiar with these legislations because they are different. But if you want to work with your person, that's fine. But if you have the maximum goal over 107,000, we're going to need that attorney to eventually write their sign off like on the raise. So, yeah. No, 4,000 would be in addition to the 6%. The 6% is the back end. 4,000 is the upfront.
That 4,000, you want it all upfront, or could you pay like 2,000?
It's a all upfront fee. Yeah. Any other questions on the small OPO fees? Okay, to the large OPO, as I mentioned to some, I think it was this gentleman in the back, the upfront costs are pretty extensive because you need to get qualified by the SEC. There's that documentation. The legal, anywhere between $25,000 to $50,000 we've seen to construct the document. The accounting for the financial audit, anywhere between $5,000 to $25,000. And then quickly jumping down here, you don't need to have a broker-dealer involved in your offering, but if you want to, you can. If you do choose to get a broker-dealer, they're typically going to charge an upfront due diligence fee and then a percentage of the raise. So a lot of our companies are choosing not to use a broker-dealer, but you can if you want to. On the back end, StartEngine's fees, we have an option for you. You can either do $50 per investor, no matter what the investment size is, plus a warrant, or you can do $20,000 per month plus a warrant, and it's a 3-month minimum. So that's your decision. And then lastly, the escrow fees are not included in our fees for the large OPOs. And here's kind of a general just overview on what those escrow fees look like. It's typically around $5.50 per investor that you'll be paying to the escrow company for the escrow fees, as well as the setup and the monthly fee. Any questions on the large OPO costs? The select OPO, again, this is the one that is just open for accredited investors. Our fee, again, we have an option. It's either $200 per investor plus a warrant, or $20,000 a month plus a warrant, no 3-month minimum there. And then the escrow fees are not included. The big difference here, though, between these escrow fees and this is that there is an accreditation process. So to verify that the person is accredited, and that costs $50 per investor to the accreditation company. Yeah. Yeah. So a warrant basically is an option to buy stock in the company at a later point. So our warrant is calculated. Basically, we get X number of warrants that we then can purchase stock in your business up to 5 years down the line. So it's based on, the calculation is based off of this fee. So it's essentially, let's say you had 100 investors, it's $50 times 100 divided by 30% of your share price that is listed on StartEngine, and that equals the number of warrants that we then have the right to buy. And we have to actually purchase that stock with your company if we exercise the warrant. Any other questions on any of this? So to recap kind of quickly, the legal and financial work for the small, as I mentioned, it's the Form C, which is that basic disclosure document. The $107,000 threshold for the financials, anything below is self-verified, anything above you need a CPA review. For your second small OPO, you will need to provide a financial audit for your financials. The large, the Form 1A, a much more extensive document, 2-year audit. You do need SEC qualification, that is a requirement. And it typically takes about 4 months to get qualified by the SEC. Normally, you file, it takes about 60 days for them to respond to you, and then you go through a round or 2 of comments before your offering is actually qualified and able to go live. Select OPO, very, very kind of quick process. Like I mentioned, you can either use the small OPO or large OPO documents for your select, and there's no SEC qualification required for select. Yeah? That's a really good question. Yeah. So, well, the question was, how long does it take for SEC qualification for the small OPO? And there is no SEC qualification for the small OPO. Yeah. So once you file the documents, you're able to go live. Now, the question that I want to address is how long does it take to get started, and then how long does it take to run the campaign? So the onboarding process, if you decide to go full service, can take between 3 to 4 weeks on average. That's what we've really seen to get the page done, the financials done, and the legal done, all kind of in coordination, 3 to 4 weeks. If you go self-service, it's typically about 4 to 6 weeks to get started. And then once the campaign is live, they run for about 60 to 90 days. So, yeah, go ahead. Not really. The question was, have you found any time of the year better for release? You know, you would think that traditionally, like the holidays were not a good time to raise capital. Maybe the summer months were not a great time, but we haven't seen those, standards really apply to our space. It seems that, what you really need here is you need people to be on their computers or on their phones to, maybe receive an email or be on the website and look at your offering. And nowadays world, everyone are on their, their smart devices all the time. So, especially during the holiday time, it seems like. So, we've seen some of our most successful races actually go on during the holiday period, which is a bit surprising. So, as I mentioned to you before, what we've tried to do at StartEngine is really make this a simplified process, both for you, the entrepreneurs, and for the investors. And basically, it's as simple as 5 steps for the investors. They search for companies. They then open the page that strikes their interest. They watch the video, read up on the story. They read up on the investor educational information to understand really what they're getting involved with, and then they invest. And I always kind of like to just show what this process looks like. So I'll just, let me see if I can. It should take me right here to the Discover page. So here's our Discover page where all the companies are listed. As you can see, there's 33 companies on the platform right now, so you can scroll through and just see, what would be interesting to you. So, I like basketball, so here, I'll click on the basketball offering and kind of see what this one's about. It takes you to their page. Like I mentioned to you, if you go full service, StartEngine will actually build this page for you, which you can see kind of what it looks like. But at the top, it'll tell you how many days are left, how many investors have already participated, how much they've raised, what their minimum is, what their maximum is. And then you could either, click invest now, or if you hit the heart, it's so that you follow the campaign so that you get updates when they post updates. And then we kind of have a shortcut thing here where you can go right directly to the team and meet the team and who they are, see the terms of the offering. And then here's kind of this is what their Form C would actually look like. So the investor can click on this and open up the Form C and really kind of read into the nitty-gritty details of the raise and what's going on. But let's say then that the company wanted to invest in the company. The individual wanted to invest in the company. You would click on Invest Now, and it would take you directly to the investment page. So we summarize kind of what the terms are for the offering. So it's $7 a share. The minimum investment is $175, and the maximum you can invest is just under $107,000. So the first thing is you would input, how many shares would you like to buy? I'm already logged in, so my account information is already in here. And then if you scroll down, their payment method. So they have credit cards set up. So that's kind of the first one that shows up. It's add credit or debit card. But if you wanted to, you can invest via ACH, or you can also do a wire. Those are the 3 payment forms that are accepted. And you would just input that information. And then right here, you're signing off on your subscription agreement. So your subscription agreement is your proof of purchase for the raise. This is your official, stock certificate, if you will. There are no stock certificates given out in this. It's actually just your countersigned subscription agreement, which is your proof of purchase. But if you wanted to read your subscription agreement, you could click on this link and see the exact details and everything and all the rights and all that stuff. And then when you're ready to invest, you just type your name and hit submit, and you're done.
So when you do the full service $4,000 for the small IPO, you do all that stuff.
This is for every company. Yeah, this is how people invest in the company. So if someone's this is just taking you through the investment process. So when someone,
So where does all that, documentation, where your stuff out?
it comes from our back ends when you're onboarding the campaign.
Okay.
Yeah. So it's kind of, I like to show you that because I think it's always, you're always wondering, well, how does this actually work? And that kind of shows you the step-by-step process. Now I'm going to talk a little bit about the marketing and how some of these campaigns are able to be so successful. And I think that's a big part about this is, as I mentioned to you at the very beginning, StartEngine traditionally brings about 30% of the investors into your campaign from our existing community through the work that we're doing marketing your raise. So that means that the other 70% traditionally is going to come from your guys' communities and your guys' following and your guys' marketing efforts. And so the question is, well, how do I do this? So on the left, I've kind of listed some high-level kind of strategies that companies have taken on that have worked, and I've kind of drawn some lines to some campaigns that have done it really successfully. So by far and away, the most successful ways to raise capital from the public is through email marketing and email campaigns. So, acquiring emails, having an email list of customers, of fans, of followers, of whoever it may be, maybe close friends and family, that's definitely the most effective way to raise capital. And Saunders, as I mentioned to you before, was a company that had a pretty nice email list when they came to us, and he hit that list 2-3 times a week, notifying his community about the investment opportunity. This isn't a thing where you just send one email at the beginning and maybe one email at the end. You have to consistently touch these people with information about the company, about the offering, and why this is such a great investment opportunity. So email marketing, really good. Campaign updates is another one that we've seen to be very successful. So on your page, you have an area where you can post updates about the company. When you post an update, an automatic email will be sent from StartEngine to all of your investors and to all of your followers. So people that click that heart icon on your page, they will get an automatic email from us when you post an update. So we encourage you to post multiple updates throughout the offering. Even if there's really no news to share, talking about the industry or talking about anything that's exciting at this time, just get in those investors' minds that you're around and this investment opportunity is available. Paid media, again, this has been a very successful one. So running ads on Facebook or any Google or whatever it may be, it's not the cheapest way to do it, but it can be a very effective way. So these guys, Rayton Solar, as I mentioned to you, B2B business, had no community when they came to us at all. They basically have raised $4.5 million thus far through paid media and influencer marketing. That's really kind of just been it for them. And they've put in, I don't know exactly how much they've put into paid media thus far. I imagine it's a good deal, but the great thing about it is that the rolling closes allow you to not have to put that money in up front. So once they hit a certain threshold, let's say their minimum was $50,000, they could close on $50,000 and take $10,000 of it and put it towards marketing. And then have that try to raise another $250,000, then close on that and put another $10,000 to $15,000 towards marketing to grow the campaign as it goes. And that's the strategy that I definitely will recommend to people. If don't don't use your own money up front. Get to your minimum target where you don't have to spend any money there, and then use that money to grow the campaign even more. Contests. So as I mentioned, you can't really do any pre-work when you're doing the small OPO raise. So what we generally recommend companies do is to run some sort of contest. And Jetpack is a company that did this very well. It's called a Gleam contest. And what you do is it's almost like a raffle. So you get entries into the raffle as a grand prize. And depending on the task that you do, you get X number of entries. So if you follow us on social media, you get 1 entry. If you give us your email, you get 5 entries. And then when the campaign goes live, if you follow us on StartEngine, you get 25 entries because you can't actually say invest because that's not permitted. But if you follow us on StartEngine, you get 25 entries. And so now you're a part of our group and you're getting all of our updates when we post our updates. And so we've seen a lot of companies get tons of emails, social followers, and then ultimately those people invest in the business. So it's been very, very successful. Perks is something that we haven't really touched on too much yet, but perks can really, really work effectively if it's right for your business. So the perfect example is a company called High Leads that raised $1 million through StartEngine. They are an athletic apparel company, and what their perk was, it was for any investor at any level. If you bought shares in their business, you would get 50% off of all of their apparel for the rest of your life. And people just went crazy for it. And I think that pretty much was the main reason why they were able to raise $1 million, is because they just had a great perk that people loved. And it resonated really well with the public. Press, yeah. Mm-hmm. It has to be disclosed in the offering document. Well, you can definitely add it midstream. The question is that considered a material change to the offering? And we would have to kind of talk to compliance on that, because if it is material, then you have to file an amendment, and there's a little process to that. Press, PR, works, doesn't work for some, works for others. Golf Board's a company that it worked really well for. They got written up in NASDAQ, and they got written up in equities.com. Saunders got written up in TechCrunch. So it's not easy to get, and it can be costly, but if you're able to land some press, obviously will help, and a very good thing. Lastly is influencer marketing. Probably the hardest thing to really achieve here, but the Rayton Solar guys were able to nail Bill Nye the Science Guy as their front man for the campaign. So he's in their videos, he's in their ads, and that resonates very well with the public and gives them some notoriety, some, it seemed to prove very successful. Other questions on any of this? Yeah. Profit sharing mean like a revenue share? Like, so the revenue that comes in, you get part of the revenue? That traditionally will be the instrument that you use for your offering. So I'm going to set up a revenue share agreement with the public, and that's going to be what people are purchasing. Correct. That's kind of your instrument that you choose, as opposed to equity or convertible debt or debt. Yeah, you can do a revenue share model. Correct. But it wouldn't really be a perk. That would be the main instrument. Yeah. Correct. Correct. Yeah.
Let's say you give it a free t-shirt.
Uh-huh.
When do you give that t-shirt?
When you close, well, it's your decision when you actually deliver the t-shirt. But you wouldn't want to give it to somebody until that money is actually dispersed to you and that person becomes an official investor. Because when they commit the money, they're not an official investor yet. They're an investor when they get that countersigned subscription agreement. That marks them being an investor. That happens when you disperse on funds.
What are the marketing efforts that StartEngine will do
Yeah.
on board something?
Yep. Yeah, great question. So the question was, what does StartEngine do on my behalf to market the raise? And we do several things. First and foremost, when you launch your campaign, you have a launch emote goes out recognizing your offering to our entire community, the 100,000 person list. In addition, you'll be featured on our homepage carousel during the first few weeks of the raise, and it'll be up there for 1 week. We repeat this process during the last week of your campaign. So when your campaign is closing, we'll send out a closing email and we'll feature you on our homepage carousel as well. Throughout the raise, we're posting on our social media accounts about you, and we're also highlighting you in our investor newsletter that goes out on a weekly basis. So we do a highlight on the CEO, we do a vertical to watch. When certain milestones are hit, we'll feature that. So you're gonna get tons of exposure and feature in our investor newsletter, and then every company will get those launching and closing emails and all of that stuff as well.
Where's your social media?
Facebook, Twitter, Instagram.
Starting.
Yeah, yeah. That's a good question. Yeah.
What about if you're a campaign, for example, I want to make a movie about
Mhm.
my life, and would your campaign include, for example, like a short film?
We can offer, short videos in our investor newsletter. So yeah, that can be happen. Or like when you post on Instagram, you can provide a short clip or whatever it may be. So yeah, if you're a film focused company or you're making a film, it might make more sense to do like a 30-second clip about what this is going to be. Any other questions about any of this stuff? So to recap about the full service program, it is a $4,000 upfront fee, and you're really going to get a lot of these services. So we're going to build your campaign page. We're going to streamline your onboarding and help you manage that back-end process that you were talking about with the legal and financial stuff, as well as give you to the front of the line when it comes to submitting to due diligence and going through that process. You have access to our build workshops, where we bring in security attorneys and independent CPAs and our content team, so that if you have any questions about the legal or financial things, we provide those people here in our office for you to work with them. And then you're also going to get that point person, whether it's me or one of the other two, where we're going to help you guys from start to finish. That's 24/7 care. Golf board called me all the time during the weekends, but it was fun because it was cool to see them really get to where they wanted to go, and it was a really fun journey. But we're available at any time, and we're here to help you guys raise the money. The stat that really kind of proves that this is worth it is that on average, the full service companies are raising $323,000 more dollars than the self-service companies. So I realize that it might not be affordable for every company, and that's just kind of the way it is. But if you do have the means and you're debating whether or not to go full service or not, I think that stat is a very telling one when it comes to it. If you decide not to go full service, which a lot of companies do, as I mentioned, everything is really kind of, here are the tools, and here's a general support line where you will get a response within 48 hours. We have free webinars, whether it's marketing webinars, onboarding webinars, on a weekly basis. So all of those tools are free for you guys, and they're built to get you through this process. And we have case studies up the wazoo of companies that have done it for self-service as well, and been successful. Are there any questions on the program? Yeah.
On the self-service, it's still get the 6%.
Yeah, the fees are exactly. Yeah, it's just the upfront fee, which is either yes or no. And then here are kind of some of our case studies of full service companies. Highly, I mentioned to you that athletic apparel company with the perks. Elliptigo is an elliptical bicycle that raised a full $1 million. Green Sense Farm, again, a B2B business. No community when they came to us, raised $607,000. They were full service company. Saunders electric car, that's his bike, but another one, and we have several others on the platform as well. It's a vertical farming business. So they're basically bringing farming indoors and kind of, yeah, it's an innovative company out of Indiana, I believe. So I think that pretty much wraps up the presentation. I don't know if you guys have any other further questions or clarification that you need. I'm happy to answer those now, but yeah. Yeah, well, it depends on how you the question was how many companies have successfully raised versus how many have not. And it really depends on how you quantify success. So I quantify success based on the number of companies that have actually closed on capital. doesn't necessarily mean that they hit their maximum target, but they've raised enough that warrants a close. And that number is 55% of the companies have successfully closed on funds, whereas 45% have not. Now, the 45%, they may have surpassed their minimum, but they didn't raise enough where they feel that, you know, it's worth it to close that money and, you know, and move forward with that.
And were those companies, did they do the full service thing?
We have not had a full service company that has yet not closed on funds.
So those companies, the 45% were companies that tried to do it on
Self-service, yeah.
So all the companies that you've done that were full service
Have closed, yeah.
they closed and made the amount of money that they were happy with.
Correct, exactly, that they were happy with. Not necessarily the maximum, like Green Sense, for example. I think their maximum was $1 million, but they raised $600,000 and they wanted to take that home.
One question. We have the three levels, 100,000, 500,000. Who sets the minimum investment that needs to be achieved?
So the question was, who sets the minimum investment that needs to be achieved? And are you talking about the minimum investment, minimum target? So our standard is $10,000. That's our platform standard as the minimum target amount.
So when you say 55 or 45%,
no, well, for some, yes. For others, it's say they only raised 15,000 and they didn't want to close on anything unless they hit 100,000. So as I mentioned, if you surpass your minimum, it doesn't lock you into having to take the money. You have the choice of whether or not you want to close multiple times or wait to the end to make a decision on whether or not you want to close.
still make the decision.
Correct. That's why that minimum target is really insignificant. It's really just about, you know, when you can start closing on money if you want to start closing on money. Yeah.
So would you say that, okay, company has like a minimum of 10,000 and they're 80, and maybe they get 15.
Mm-hmm.
Is it worth it to, you know, after the remainder of the year? Yes.
So the question was, if your minimum is 10, your maximum is 100,000. If you hit 15, is it worth it? That's a good question. It probably varies company to company. What I would probably say is, you know, if you're comfortable with it, why don't you close on the 15, put 5 towards a paid advertising budget to see if you can get this campaign to maybe 35 or 50, and see what that paid ad campaign can do, assuming that you haven't done it already. Or maybe putting that money towards PR, putting that money towards somewhere else to try and drive more investments and more traffic. And then once you're at 50, doing the same thing and closing on the 50 and taking maybe 10,000 and adding to the, you know, the channel that's really working and driving investments. And we have analytics on our platform that allow you to track, you know, where these investors are coming from, what they're doing on your page, where they're stopping in the process, so you can be really smart with your marketing efforts. And that's a really important thing is when if you're going to be spending money on marketing, you want to make sure it's working. If it's not working, why? Where's the fall off?
Seems
So,
like you base it on momentum too. Like,
momentum is huge.
Did it take forever to get that 15,000, or did it come fast?
Momentum is big for sure. We've seen really, really big spikes at the end of the campaign. So during the last like 10, 12 days of an offering, companies have raised significant capital during that part of the campaign. Why? Maybe people don't like to get things done until the last second. I don't really know the reason for it, but Golfboard, the investors, yeah. Golfboard raised $1 million during the last 10 days of their campaign, which was just crazy. I've never seen a company surge so much during the last 10 days of the campaign. And it wasn't, I mean, they turned up the marketing during that last 10 days, but it wasn't anything as, you know, dramatic as compared to what they were doing earlier. It's just that the time was now. They had some exciting updates that they could share, and people just flooded in. Urgency is big, though. Yeah.
Very important to mention is the answer to this question. Is that the company's trying to raise, let's say, 100,000, the other raises 12.
Mm-hmm.
To close on the 12, they don't have the opportunity to do another raise unless they get home. If they pull out, they may be able to advance the business a little bit and get their marketing campaign in better shape. So
Sure.
they can do it.
Yeah.
Try to get to the 100, but not be caught with that point issue.
Well, that's a great point. It's a complicated question. The question was about kind of going back to if it's worth it to close on $15,000 and you're trying to get 100 because you might need to do an audit the second time if you go back. It's actually, now we're getting into the nitty gritties of the rules, but if it's your second time raising capital and you have not exceeded $500,000, or let's say you raise 100 during your first raise, your second raise, if you have a maximum goal of $400,000, then you don't need an audit. You only need a review. If you have a maximum goal of $500,000, so it would bring your total between your first raise and your potential second raise to above 500, then you need a financial audit. So again, this is kind of, we're in the weeds here, but yeah, there is a kind of a way around that. Yeah.
Are there any subjects that are better than others, or you guys found me? I didn't find you.
Yeah.
And so I came because I just was curious.
Sure.
And I read your material. But why did you solicit me?
So it's just a great question. Are there industries that are better than others? Are there companies or, whatever it may be that, favor more towards this space? I think initially when this all started, consumer-facing companies were the best fits because they could go out to their customers, to their fans, to their followers, and offer them an investment opportunity in the business, a company that they most likely really liked and enjoy because they own the products, whatever it may be. So that's kind of where this whole industry started. It's since developed from there that now what we're seeing is that that individuals are investing in businesses that they're passionate about, that can make a difference in our world, make it cleaner, more efficient, safer. That's what the public wants to rally behind and get and invest in, are those types of businesses. Obviously on top of the businesses that they own and enjoy and use their products. So it really has, so if you are like a solar company, right? That's a great example. They had nobody, but they're doing something that's gonna make our world a cleaner place. And people get excited about that.
I mean, I'm on the artistic side. I'm not a solar company. I don't have a product. I'm on the artistic.
Well, film has been great. Crowdfunding and film go hand in hand very, very well. I think there's the big studios that, they produce the films that they want to produce that make money and all that stuff. But maybe the really great stories that don't get told that the public really want to hear, that's where the crowdfunding comes in. So the public says, I want that film or that, whatever art it is, I want that to come to the mainstream public. And so they are able to pitch and invest and help you get to where you want to go. Yeah.
Your pool of accredited investors, are there institutional investors in those funds that invest through the platform?
Not traditionally. The question was, are there funds that through the accredited investors that are investing through the platform? We have seen some businesses invest through the portal, but traditionally they're just angel investors more so that are putting in larger checks. Yeah.
I have a question about international investment. For example, maybe you have like a fan base in Australia, but you're not able to service the market properly because you're not being so you want to market to those folks that you service the market directly. Do we have any kind of like special considerations like perks and opportunities that you might offer them to help?
So you're talking about,
Move that forward.
I'm not sure if I'm totally following the question.
There's so many different roles that we have that I'm kind of hearing, as far as like what you can do as far as soliciting investment. Is there anything special on an international level?
Well, you would probably need to conform to making sure that it's legal to sell the securities in that country or region or wherever it may be. As I mentioned, Canada is not permitted, so Canadian citizens cannot invest under these rules, but we haven't experienced issues with any other countries worldwide. We have several investors from Australia that have invested in companies, so you shouldn't experience any issues at all if you're going to accept with international investors. And our platform has actually banned Canadian investors from the platform. So if you type in that you have an address from Canada and you want to invest, you get a pop-up that you can't actually invest in the company. So until Australia comes out and says, our citizens cannot invest in, you know, American companies through these rules, then they're free to invest. Are there any other questions? Yeah. Yeah.
What's on the invest like in the United States? That's 6% total growth of the profit, right? Then you invest also in the international investment. You have to, if you take 8% of international and 6%.
Yeah, so only 8% on the internationals and 6% on the domestics. And if you add credit cards as an option, which is your choice, then it's an additional 4 on top of that, so 10 and 12. Good. Thank you. Well, I appreciate that. Thank you so much. Thanks. Thank you. Thank you. Thank you so much. Was there another hand or? Okay. Yeah, so later today, I will send you guys the deck of this presentation. Yes, email, exactly. And we should have all your emails because you all signed up for attending the event. But if there are no other questions, thank you so much. We have lunch outside for you guys, so you're welcome to grab a sandwich. We'll be here, Kinsey and myself. We're going to bring in some more of the team, and we're here to socialize and answer any questions that you have. But thanks, guys.